Hey folks, Dan Frio here with your real estate update for today. So you see mortgage rates, they continue to come down and down and down, and we have some rates already in the mid sixes. If you're looking at FHA or VA rate, it's at 6.5% right now. People thought I was crazy when I said rates would come back in the sixes, and they're here right now. But in today's video, we're gonna give it a little bit of a historic, economics class. Don't turn the dial, to be really quick. Basically why the Federal Reserve is created, because the headlights are going to be on this week, are going to be on the Federal Reserve. Why? Well, they're meeting for the last time next week, and they're going to determine if they're going to raise rates once again or not. So we're going to explain why the Federal Reserve is created, and then we're going to look at the data basically that they look at to see what's going to go on with interest rates at this next meeting and basically into 2024. So let's get over to it. Why was the Federal Reserve created? Well, they were created in 1913 by Congress, okay, to enhance the stability of the banking system. They have two mandates. Those mandates are maximum employment and price stability. Okay, what we're going to talk about right now is price stability, aka inflation. You remember how the Federal Reserve has been coming out saying, okay, rates are going to be determined by the data that we keep getting in. Okay, so that's what we're going to take a deep dive in this week. What data is coming in this week that's going to make the Federal Reserve's final decision next week of are they going to increase rates or not? So let's get over to it. The economic calendar we have for the week is basically Monday, nothing. On Tuesday, again, folks, we want to look at the jobs reports, the jobs numbers, employment, and inflation, price stability. So to do that, on Tuesday, we have a JOLT index. What the JOLT index is basically if you click it, you're going to see right through here. The survey done by the U.S. Department of Labor Statistics on how many job vacancies there are. So how many companies out there have jobs that are unfilled? Okay, so the last reading came in at 9.5. They're expecting that to come in at 9.3. Reason being is there's not as many people hiring right now. But what's going to throw a curveball into some of this data is the holiday. Okay, the holiday season, people bring in part-time workers. Also, we've had some strikes. United Auto Workers, the Writers Guild, all those people, they settled their grievances. I don't know if that's a perfect word to use, but a lot of those people are back. So these might throw the jobs numbers a little bit for kind of a tizzy right now, but we'll see how that data comes in. The next thing is on Wednesday, we're going to see ADP's job numbers. So that number previously came in 113,000. It upticked to 128. The Federal Reserve, as you've been hearing and reading over the last year, they want less and less people getting back to work because they don't want people earning as much money and keep buying stuff for the inflation front. So this number, going up might kind of freak out the markets a little bit, but we'll take that and we'll figure out where that's coming in at. Then on Thursday, we have initial jobless claims. How many people lost their jobs for the first time? Okay, the Federal Reserve wants this number to peak at about 300,000. Well, the data right now came in previously at 218,000. They're expecting that to increase a little bit. And then on Friday, it's a whole slew of data on Friday. Average hours earnings, how much people are actually earning. Is it going up, down, flat? Non-farm payrolls, and then the unemployment rate. So this week's data a lot of it is going right around the employment numbers and how much people are making. So now let's take a little bit more of a deeper dive in where the Federal Reserve is expected to get push rates. We'll say at the next meeting, and then we're going to take it all the way out to the end of 2024. So let me get my head out of the way for 1 second. And here's where the numbers are. Okay, so right now, just to put this into context, right now the federal funds rate, that's the rate that the Federal Reserve controls. It is at 5.25 to 5.5. You're seeing that right through here, okay? So the probability that they're gonna stay at this rate at the next meeting, you see this right here on December 13th, you scroll over here, there's a 99.7% probability that they're gonna keep rates right where they are, okay? So now here's the interesting thing. January, they're expected to keep rates the same as it is. Now, here's where it really starts falling off a cliff. March, April, May, June, July. Look at these numbers, the blue numbers. They keep coming over to the left over and over and over. What does that mean? Well, if you look up through here, this is the federal funds rate at the top. If you look down through here, this time next year, there's the most probability, the highest probability is right here. 4% to 4.25 is where this is from the Fed, folks. This is from the Federal Reserve. This is what they call basically a dot plot on where they're expecting rates to be. So if we're at 5.25 to 5.5 right now, Next year at this time, they're expecting us to be 4 to 4.25. That means there's a 1% to 1.25% reduction in interest rates coming. And again, folks, this is from the Fed. Okay, so we're expecting rates to drop at least 1 full percent from this time right now till next year. So based on the data that we're seeing today, which is really nothing, what's going on with mortgage rates today? Okay, so how we figure that out is we go over to this and we monitor what's called the MBSs. What the MBSs are is a mortgage-backed security bond. Okay, so the Federal Reserve, they control what's called the federal funds rate. It only changes when the Federal Reserve meets, and sometimes it doesn't even change. Okay, but mortgage rates change every day. So how does that work? Well, mortgage rates are determined by a mortgage-backed security. So what you want to do is follow the mortgage-backed security market and follow my channel on a daily basis. We're going to check and see what the price of this is doing. So here's how it works. If the price of the bond is going up, like you're seeing right through here, that means rates are coming down. There's a yin-yang, there's a flip-flop effect. Okay, this is the last 5 days. We went from here all the way up to here. So when prices go up, rates come down. Well, rates have gone down 0.5% within the last 2 weeks, almost 1 full percent over the past month or a little over a month. So rates are on their way down and down and down. How far are they going to go? Don't know. And we're going to find out a little bit more from the Fed next week. But that's why we try to figure out each day, on the data that's getting presented to us, what's going to happen with mortgage rates. So if you're out there right now and you're like, hey, Dan, I love watching your channel, but what do you really do? Well, the great question, because I see a lot of people saying, hey, I locked in my rate and I'm doing this and I'm closing on a house and I'm building a house. But a lot of you guys, I wish you'd use me. Okay, what do? Well, I'm a mortgage advisor. I'm licensed in all 50 states as well as Puerto Rico, and I've been doing this for over 30 years. So how do you reach out to me and my team? Well, go to the rateupdate.com. Here's my website. And you can reach out to us to get pre-qualified, answer questions, see if you can maybe refinance. Maybe you closed a month ago at 8%. Now rates are 7%. What can you do? Maybe you're already locked in with a rate right now and you want to see, can you guys get me a better rate? We'd love to do all of that. Go to the rateupdate.com. You're going to find all the information right here. If you want to reach out to us, hit the apply now button, or you can scroll down and you're going to get some more data, and I'll show you that in a second. But if you're already locked in with a lender or you got a loan estimate from somebody, upload it into our system right here. It's called Loan Estimate. So if you call the bank, you got pre-qualified, they send you out a mortgage package, what you're going to do is upload that package right into there. What we're going to do is analyze your data, and then we're going to look at it. Can we get you maybe a better rate or lower fees than you're getting? And that's what that loan estimate's going to do for you. But if you're out there and you're looking to try to get pre-qualified or just ask questions, scroll down to the bottom of our website and you can give us a call or email me directly. You can call us right here. There's our number, or you can email me directly right here. And I am the one that will answer on that question. So that's it for today. Please come back every day so we can analyze the economic data coming in and where we see mortgage rates going from there. Maybe it might make more housing a little bit more affordable for you in 2023 and especially in 2020. So thanks for watching, guys. God bless. Have a fantastic day.